Strong market. We've been talking about it for days in terms of the market finally breaking through that resistance. It did yesterday. I found it to not be that difficult to play. Perhaps because I just had it set in my mind that we would hold 266 and then eventually we would test the prior day's high and get through and go to 268. We're gapping higher this morning. We're $1 away from the March 22nd gap fill, which seems extreme high probability at this point. That's right here. So you can see this. This was actually, I think this was like a Fed day, right? So we broke to the upside, went to 273, came off hard. It was like 270.30. The next day, gap lower, and led to that 2-day drop. We were looking for, I was looking for the bounce probably above 260, but a $15 down move over 2 days. We did get our bounce the next day, gapped higher, and then the rest is history. The VIX is below 16 now. We are coming back into that area where which is this. See very clearly on this chart the narrowing of the ranges each day. So here's where we most likely end up by tomorrow, the latest. And we'll see. So I think, the next stage is, do we come off here and then do we actually work our way back into the mid 260s again? Or do we actually get through 270, hang out above or below 270 for a couple of days, and then work our way back up to the mid 270s? So remember, after the first down move, we had a huge bounce back rally, 274. So if we actually stick in this 270 for a couple of days, hit it, and don't really pull back much, that comes into play by, I guess, by Friday. Unless people just decide to go on and start buying the next couple of days. So that's on the SPYs. It's been very calm in the pre-market. You can see it's been holding around 269.20. If we do get some sort of news intraday and we get some selling pressure, obviously the first obvious thing is to look for yesterday's high.
Alpha pop-ons for gold.
Somewhere into 268.20 or close to thereabouts. So have alerts, let's say 268.50. And we'll see. IWM above 156 this morning.
Russian central bank saying that currency market will have an impact on the May inflation reading.
So just looking at, this is March 22nd also. This one opened around 156 on March 22nd and came off into the after hours to 152. So this is definitely an important area here. The gap down was from 157. So and right on the open, if it popped to 156.80, 157, I would look at fading that and see where we go from there. Doesn't seem like it's going to be that likely to happen right on the open, but if it did, that's how I'd play that. All right, so not that much in play. I probably mentioned yesterday, earnings season is getting going this week, and we'll get really busy next week. Netflix used to report their earnings later, probably in the following week when Amazon and Apple and all those guys did. I'm not sure if they moved it up to yesterday so they could get more attention or have the data themselves, but it really is the only big thing going on. It's going to be very tough, I think, to trade around this 330 level. I know when we looked at it last week on those couple of days, we had some real good levels and it traded off of them with less than $1 risk and moved several dollars, but this is going to be hard. I think if we look at the after hours, it'll give you a taste of kind of what it might look like in the first few minutes, but after breaking above 330 in the after hours, which is an obvious level, got up, this is probably around the all-time high right here, came up very quickly, $7, and then couldn't get back above. You can see people are probably shorting into this 330 here, and then came off $5-6. So people who shorted on a failure of 330 in the FRs did pretty well. This morning they're opening it right at 330. And to me, this area here, and the theme always, for those of you who are newer, one of the things that you'll always notice during earnings season, most times, like at least 75% of the time, I would say, whether it's Amazon, Netflix, Tesla, all the momentum names, even when they have good numbers and they gap higher, right in the open, you always get something like this. Even if it's going to end up the day going, closing at 340 or something. So it gives you it's a good opportunity to kind of, number one, you'll see guys on the desk, they'll short it in the pre-market here, and they'll like cover quickly into a 5 or 8 point down move. And then you'll be able to judge, does it come into the 325 area? How quickly does it bounce back up? Does it bounce back up quickly like this? And does it hold higher and then break through the pre-market high? And so you have a good long setup. Or does it come into here, you get this quick pop up, and then by 10 o'clock, it's down below 325. Then kind of what I was talking about, I think, in yesterday's morning meeting, was expectations were so high, everyone's so bullish that there's going to be people looking to take profits, and you'll get a move down, 310, 315, something like that. You'll be able to, I'm not going to make a prediction on that based on anything I've seen. Everyone's raised their price targets on it. They did raise guidance by 20%, which is huge. Everything looks really good. So the easiest way to do that in terms of, can you gauge, is that a possibility? Well, it was a $200 stock in January. So it has gone up 50, 60, 65%. 330 is 65% from 200. So that's the argument, like, oh wow, they raised guidance 20%, and the stock's up 65%. So maybe the stock can come back to 280, but you have to see the price action. So what that would look like is kind of what I just described: the down move below 325, and then not much of a bounce, and then it just buyers controlling all the way down. By the way, if you started to see that, let's say Tuesday. It might not be the worst idea to buy some 300 puts for Friday. And that would be a way to capitalize if it actually came all the way down to 300 in the next day or two. So be mentally prepared for any outcome and understand that it's going to be very tricky right on the open. So if you're going to trade it, do it with very little size so you don't get wiped out of the game. So I'm sure there'll be at least 1 or 2 very good setups after 10 o'clock. The next one is Roku. So I haven't looked at Roku in a while. Such a controversial name. So this was probably earnings here. There's obviously some news here. They gapped it down to above 40, and I guess once it started to hold below 39, it trended all the way back down to 30. Which I noticed that there, I probably would have started to nibble on the long side. My bad. And so the news this morning, which, the two things that drive Roku really are, can they have a model where they get some revenues on the ad side? Can they get integrated into televisions, which helps them get larger penetration than people like me who've had the dopey little box for years? And will they become popular as really subscription services take over the next 5 to 10 years, whether that's Netflix, the new Disney subscription. Now we hear the thing that's driving it higher is ESPN announced a subscription service, and the people just decide, does this platform become big? There's some arguments, there's a lot, it's a crowded field, right? You have Google Chromecast, you have Amazon, you have Apple TV. One argument for Roku is that they have no preference in terms of content, and their interoperability with different technologies. So they have Amazon Prime app on there, they have the Google Play app, whereas Google and Amazon are fighting with each other. It's really good, Roku, by the way. I tend to use it less now that I have a Google Home and I have Chromecast, but they have a ton of apps. So it's gapping up this morning on the upgrade on the ESPN, and you can kind of see the bid is above 35 right now. But it is, technically it's a bigger term downtrend. It's coming back up to this area. The idea that it would fail right here is not absurd. And so if it does fail, 34 is the soft gap fill from the high from a couple of days ago. You can see it was already above 36. I mean, I would definitely, if I was trading in the market, shorting it here for potential move back down to 34 and a half, 34. Let's watch right on the open if it pops and fails 36. Play it for move back down to 35. And you'll see if the buyers really hold that 35 there and they start stepping up, you can play it on the long side. But above 36, I'm very scared. I mean, you can see the downtrend here. So, all right, so ALKS. So ALKS was interesting. Originally, I put in the morning game plan that the FDA had about face and approved the drug, and then realized that all they had done is now accepted their new drug application. I think once people started to realize that, they hit it pretty hard back down below 48. But still, they're in a much better position than them when they were. The stock was $57 a share. People assumed that the FDA would review. The FDA said no, they wouldn't review, and it went down. That day gapped down to $48, ended up trading all the way down to 42. Now they're actually getting a review. So the idea that the market's pricing it down here doesn't make a lot of sense to me. So I think, 44, I didn't get involved down there, but it had a little bit of a bounce from 44 at the end of the day yesterday. Playing it for move back up to 46 to me makes sense. And then kind of see. Actually, I don't think it's out of the question that it would work its way back up in the next few days, up back to 48. It's going to depend on where people come down on. Is this review a serious review? But they're in a much better position than where they were. It should have an impact over the next few days. So this morning, just have to make sure you have some alerts at 44 and a quarter, 44, trading against yesterday's low. And if you notice that it doesn't come all the way into 44 and it consolidates in the 45 area and breaks to the upside, you could also play it that way as well. ACIA, this was an interesting one because we saw that they lost, they could no longer sell to ZTE because the Commerce Department banned ZTE for, I think, trading with Iran, selling products in Iran against the export bans. And so Asia, 30% of their business last year was ZTE. And clearly, the down move from the 60s to the 40s hadn't anticipated that potential ban along the road. Once it got below 30, it came off pretty hard. It tried to bounce from 26. It got up to 27.30 and then failed again. What makes it tricky for me is just the firm is net shorted all the time. So as I've mentioned many times, it just makes it tricky to trade on the long side. So there was a good call out in the chat room with a large bid here at 26. It actually popped 80 cents from there. So there was a very little risk to trade that. Once that buyer dropped, it did come off another $1 or so, and then finally had a bounce back above 26. So it still looks pretty shitty. But if it moves sideways for a couple of days, you can kind of play probably this range and then kind of see where it goes from there. Certainly, if it gets back above 27, you could look for a larger bounce. And then BMY. So we didn't look at BMY yesterday. I called out NKTR above its long-term support. That ended up having a huge bounce. So I'll take a quick look at that as well. This is the one that had the news. NKTR went down in sympathy. It had a decent bounce as well. Nothing like NKTR. 52.80 back up to 54. Let's do a 5 minute so we can kind of see what that looks like. Okay, so there definitely was a seller at 54, which caused the final down move to 52.80, and we're above 54 this morning. So let's, 53.75 and 54 are the two levels to see if it supports this morning for the buyers to step in. And then let's take a look at NKTR quickly. This had a great bounce. I shied away from it because I was jumping around on calls and things like that, and then also the firm was worried about the net short thing again, not being able to head out. Plus, I was only on the desk here at 84. I could have put in the script to buy it at 82. The long-term support held. I think Aaron put it in the chat that it was a classic reversal pattern when it did the big green and then held above 84. In those situations, you play it for move kind of back down, back to where it broke down from. And it got, you can see that's why it wicked there, and then clearly everyone was playing it for a move, and not everyone, a lot of people were playing it for a move to that. That's why you got that quick pull in. And after consolidating for about a half hour, it came back up to that level, and then at this another leg to almost 94. I think that's where we are this morning. So, looking at it this morning, you could look to see if there's some buyers at 90, 92 would be the play here. Even more aggressive if it came into 90 for a bounce play. This sort of a bounce, it does look like it could work its way back up to where it started from. Now, I just want to make it a more general point before I log off. This is one of my favorite setups. Sometimes it plays out after earnings, sometimes in intraday breaking news. This is a huge advantage as a short-term trader you have over people who aren't in front of their screens during the day. But this is a stock in a longer-term uptrend. Has very clear support on the long-term chart at 82. You can see from this area here and then here, which then led to the all-time high. If you get an intraday break where something drops $10 into long-term support, your ability to play this, and now it closed back above the long-term uptrend, longer-term players may never get an opportunity to, we might hold this longer-term uptrend and they're buying on a breakout above 107, which is fine, but it's a huge advantage you have. But sometimes companies will report earnings, we'll gap down, and we'll talk about playing off of these levels. Sometimes if the news is really bad, if it actually has bad news, it'll gap into this level and get below, and then we'll play it for on the short side for moves down to down to the next longer term support over the next few days. So big advantage. You want to take advantage of it when those opportunities arise intraday. As always, so UNH is a really tough stock, so I'm not going to actually look at it.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.